Tokyo, Reuters, Asian shares eased on Thursday after the Federal Reserve raised interest rates and took a more hawkish tone in forecasting a slightly faster pace of tightening, while concerns about U.S China trade frictions kept investors on edge. Chinese retail sales and urban investment data were surprisingly weak, pouring cold water on investors' euro trademark risk appetite and adding to uncertainty over the world. A euro trademark's second largest economy after its central bank unexpectedly left interest rates on hold. MSCI's broadest index of Asia-Pacific shares outside Japan. MIUP J0000 plus lost 0.5%. South Korea's Kospi. KS11 was off 1.2%, while Hong Kong's Hang Seng. She dipped 0.2%. Japan's Nikkei. N225 shed 0.4%. The Fed raised its benchmark overnight lending rate 0.25 percentage point to a range of 1.75% to 2%, as expected, on the back of strong U.S. economic growth. Fed policymakers' euro trademark rates projections pointed to 2 additional hikes by the end of this year compared to 1 previously, based on board members' euro trademark median forecast. A euro Fed was slightly more hawkish. But at the same time, the Fed is raising rates because of a strong economy and not because of the need to contain inflation. So that might have helped curb market reactions, a euro said Masayuki Kichikawa, chief macro strategist at Sumitomo Mitsui Asset Management. The specter of higher borrowing costs hit stocks while boosting U.S. bond yields and the dollar. The overall market reaction was short-lived, however. A euro when you look more closely, only 8 board members saw 2 more hikes by the end of year, compared to 7 who saw 1 hike. In March it was 7 versus 8. So you are talking about a change of only 1 board member after all, a euro said Norihiro Fujito, senior investment strategist at Mitsubishi UFJ Morgan Stanley Securities. A euro fact that markets quickly reversed their course suggests the Fed euro trademark's decision was broadly in line with expectations, a euro, he said. On Wall Street, the S&P 500. SPX lost 0.40% and the Nasdaq Composite. IXIC dropped 0.11%. The 10-year U.S. Treasuries yield hit a 3-week high of 3.010% before quickly slipping back to 2.953%. U.S. 10-YT equals RR. Keeping investors in check were concerns about U.S. threats to impose tariffs on billions of dollars in Chinese goods. U.S. President Donald Trump will meet with his top trade advisors on Thursday to decide on whether to activate the tariffs, a senior Trump administration official said. In the currency market, the dollar had erased all its post-Fed gains as traders' euro trademark focus quickly shifted to the European Central Bank euro trademark's policy meeting later in the day. Recent comments from top ECB officials have sparked expectations the ECB may offer clues on its intentions to end its bond purchases by the end of the year at its upcoming meeting. The euro traded at $1.1801 euro equals, bouncing back from $1.1725 hit after the Fed's policy announcement and not far off last week's high of $1.1840 on June 7. The dollar stood at 110.19 yen JPY equals, losing steam after hitting a 3-week high of 110.85 in the wake of the Fed's decision. The dollar index has erased all of its gains so far this week and stood at 93.501. DXY. The Australian dollar fell 0.3% to $0.7556 after China reported weaker than expected activity data for May, adding to views the economy is finally starting to slow under the weight of a prolonged crackdown on riskier lending that is pushing up borrowing costs for companies and consumers. Some emerging market currencies were hit by worries higher U.S. interest rates could prompt investors to shift funds to the United States and also squeeze dollar borrowers in emerging markets. The South African rand hit 6-month lows ZAR equals D3 while the Mexican peso dropped to 16-month lows MXN equals D2. Still, many Asian currencies remain fairly stable so far, thanks to robust growth in the region. Oil prices were little changed but underpinned by a bigger than expected decline in U.S. crude inventories and surprise drawdowns in gasoline and distillates, which indicated strong demand in the world. A Euro trademark's top oil consumer. U.S. crude futures CLC1 traded at $66.67 a barrel, unchanged on the day but extending their recovery from 8-week low of $64.22 touched last week.